impact of fall in value of Indian currency. Value of Indian rupee has been consistently falling when compared with other major currencies of the world in the recent times. For example, as against US dollar, the fall is 8.9% during the year 2012 itself. And when we look back in the last 4 years, that is January 09 to January 13, the fall is 84%. In the year 2012 itself, the rupee fluctuated as against dollar, which is reflected by this graph. So it was very strong in the month of February and very weak in the month of August. Now this fluctuation in the value of rupees, it impacts the Indian economy in more than one way. Let us see how it impacts the Indian economy. First, it fuels inflation. Let us see how it fuels inflation. India's imports are more than exports, and during the financial year 2012-13 itself, for the period April-December 2012, Indian exports were US $215 billion and imports were $361 billion. This has resulted into trade deficit. Now, importing of raw material, including oil, at higher cost due to this fall in value of rupee, it results into imported inflation. So we are basically importing inflation. We are importing the raw material at higher cost. That is how we are importing inflation. The prices of imported goods or raw material increase the price of final goods and services available in India, and that fuel inflation. So those goods and services which are manufactured from imported raw material, their cost of production moves up and their ultimate sale price also moves up, and that way it fuels inflation. So that is one major impact of falling value of rupee. Second, it impacts the growth due to lower profits to corporates. Let us see how. Companies which import raw material have to incur more cost on their quantity of import. And companies those have borrowed overseas, there are many such companies, they have to incur higher cost of borrowing in terms of interest payments also, in terms of repayment of principal also. In addition, this also increases their working capital requirements. And when their working capital requirement increases, it increases their interest cost also, interest on working capital. Hence, this fall in value of rupee impacts profits of the corporates adversely. And this restricts their growth plans. And ultimately, it leads to slower overall economic growth. So, the falling rupee in a way impacts the growth of further business by the corporates. Now, impact on capital market. So, falling value of rupee also impacts the capital markets. Let us see how does it impact. When corporates earn a lower profit as a result of falling value of rupees, it impacts value of those shares as they are not able to pay attractive dividends due to low profits. The investors who have invested in such companies may not like to retain their investments because they may not be finding their investment attractive. As a result, they may like to withdraw from market so far those companies are concerned. In addition, the foreign funds which have invested in such companies through FII route, they also tend to withdraw themselves from capital market, creating a crisis situation. And local investors who look for alternative investment avenue such as gold also withdraw their investment from the capital market. In this way, the impact of falling rupee value is on capital markets also. Now all this shows that the falling rupees or the falling value of the rupee, it impacts our economy in more than one way. Thank you friends for watching this video. I hope the contents have benefited you. Thank you once again.